Father, we thank you for the opportunity to hold this meeting today. We yield the control unto the Holy Spirit. Take absolute control as we go on in Jesus' name. My name is Prince Adiremi Adekile. I am the managing partner at Royal Heritage Solicitors. It is my privilege and pleasure to welcome you all to Royal Heritage Platform 2022, the webinar on Fintech sector and its regulatory framework in Nigeria. I am truly excited to see all of you in attendance today, including many distinguished officials, regulators, Fintech executives, financial inclusion experts, my Lord, the justices of the Court of Appeal, my Lord, the justices of the Supreme Court, judges of the High Court, President, jurists, academia, scholars, senior bankers, capital market operators, microfinance operators, network service providers, remittance companies, industry participants, and my distinguished colleagues from the bar. I welcome you all. I especially thank you for coming to help us to understand the regulatory framework of what I now understood to be the intersection of finance and technology. Ladies and gentlemen, there is no doubt that we have experienced a very remarkable increase of new platforms and technologies for financial services. Again, gentlemen and ladies, this what was enabled to state has been followed by increased private sector investments across all the sectors of the economy. Definitely, this is an ideal time for the regulators and regulatory approval authorities to engage with the stakeholders to let them know what is being done to safeguard, to protect the investors, their investments, and users of these now ubiquitous fintech platforms. Fellow participants, in one meeting today, one singular meeting, we have brought the regulators face to face with the various stakeholders. Fintech, as all of us are experiencing, is definitely moving very steadily to go and play an important role in the future of the economy of this great nation called Nigeria, as we inch towards becoming the global leader in innovation and mobile money. Gentlemen and ladies, fintech innovation, I must state, and with every sense of responsibility, have the potential to transform the economy of Nigeria. And I dare say, actually, that it's going to transform the global economy. It rides on its way. Today's forum, here where we are today, provides stakeholders the opportunity to look at all the issues, to look at all the challenges, to look at all the problems. And again, ladies and gentlemen, to look at the prospects. The prospects associated with fintech and its phenomenal growth, particularly in Nigeria post-COVID-19. Ladies and gentlemen, I want to state with every sense of responsibility that with the array of panelists that we have here today, This webinar looks pretty set to provide the answers to those challenges frequently encountered in relation to fintech platforms. And gentlemen and ladies, what are these challenges? One very major concern is how innovators will address the issue of fraud, the issue of cyber security, and the issue relating to the safety of data and assets in a blockchain. Again, there is also the issue of unsecured and security-based crowdfunding. Ladies and gentlemen, this security-based crowdfunding, if well managed, can be a good vehicle for SME to raise capital. But the associated high risk has now become an important feature of the fintech ecosystem in Nigeria. The CBN, NITDA, SEC, EFCC, NICOM, judges of the various high courts, justices of the Court of Appeal, justices of the Supreme Court, and also other regulators, too numerous for their institutions to be mentioned, are present here with us today. And one thing operating, it will be operating insights, the insights from today's webinar into their regulatory approval systems and decisions. One exciting thing about today's webinar is that we're reaching out to a wider audience, local and international stakeholders through our social media handles. In doing this, we are hoping that we can further enrich the engagement outside of this meeting, and that is possible. It is a possibility. Gentlemen, ladies, distinguished participants, I would like to stop here at this point to allow all of you, our experts, to have real time to exchange ideas and information. I want to especially thank you for coming today, and I wish you a very successful celebration. Thank you very much. Thank you so very much. Thank you. Thank you. Thank you.
Thank you very much, Prince Aderemi Adekile, for that welcome address that has set the tone for today's webinar. I want to sincerely welcome all of us to the Royal Heritage Platform. I welcome you all especially to today's session. We are delighted to have the distinguished speakers that we have on our panel, and we are indeed honored that you are able to make the invitation. We are grateful for the attendees. Today, we are beaming much light on the fintech sector, and Prince Aderemi Adekile, like I said, has set the tune. Without belaboring the issue, there is no doubt that the fintech space in Nigeria has grown significantly in the last couple of years and has become very pivotal to the many innovations and changes that we have witnessed in the financial sector. Of course, this growth will not be unconnected with the increased smartphone penetration and, of course, the focused regulatory drive by the regulators, and especially the cashless policy of government. We know that these innovations have come with a lot of potentials, and have impacted issues of fairer and more inclusive financial system and healthy competition in the industry. But like we all know, these innovations are driven by technology, and technology in its nature is amoral in the sense that it has both good and bad effects. The risks associated with these innovations are very serious issues staring at us in the face. And so in the fast-paced, exciting world of fintech, the regulator have had to struggle to catch up with the regulations to be able to cope with the challenges that innovations are posing to us. It is in the light of all of this that we thought it wise that we look critically at the fintech sector in Nigeria. Look at the regulatory framework with a view to highlighting what it has provided for, what needs to be provided for yet, and do some kind of evaluation. Our speakers this morning or this afternoon, I must say, are indeed distinguished. They are industry experts, they are principal regulatory officers. And so we have known they are more than ably qualified to look at the issues that we present this afternoon. We are honored this afternoon to have on our panel the person of Mr. Segun Oloketui. Mr. Segun Oloketui is the chairman of CharmSwitch Limited. And in the course of introducing his topic, we will get to meet this person and to be able to know and confirm to ourselves that he's indeed qualified to speak. Apart from his experience in the banking industry, in the traditional banking industry, he has also distinguished himself in the fintech space. We also have in our panel the personality of the Director of Legal Services of the Central Bank of Nigeria, the core regulator of the fintech industry. I am very sure we have a lot to learn from him as to what the core regulator, the CBN, is doing with regard to fintech space in the industry. We are also honored to have, in the course of this webinar, the personality of the managing director of Wema Bank. He would be able to look at the situation, or rather, they address the issue as to whether fintech is indeed a competitor or whether it has come to complement the traditional banking industry. And we are delighted. And in fact, I'm really, really looking forward to how he addresses this issue, particularly also that he has one of the leading banks in this country that has been able to not only prove its worth in the traditional banking space, but that has also shown that they are prepared to transit as the fintech continue to make inroad. We also have the distinguished personality of the Director General of the National Information Technology Development Agency, in the person of Mr. Abdullahi Inua Kashifu. Of course, fintech does not drive on its own. There are data issues associated with it. And so this, the DG will be able to tell us, discuss the issues around the data that drive the fintech industry, the privacy issues, and how the regulations that they are bringing forward or they have brought forward has been able to address the issue about data protection and the fraud that may sometimes occur in the fintech space. We also have the distinguished personality of the Chief Operating Officer of Fintech Association of Nigeria. You and I will know that this webinar will not be complete if all we have in our retinue of panels will be regulators and, without having the core operators of the industry. He will be able to talk to us as to how far fintech has gone and the future of fintech in Nigeria and the investment opportunities that are bound in it. All these will be able to give us a balanced approach to the webinar we are talking about, and indeed justify the searchlight we intend to beam on the fintech industry in the light of the regulatory framework. Distinguished panelists and speakers, without taking so much of our time, I want to quickly invite our first speaker. And our first speaker, like I said earlier, will be Mr. Segun Oloketui. Mr. Segun Oloketui will speak to us will give us an overview of the Nigerian fintech sector and its regulatory framework. And it's my honor and privilege to inform us that Mr. Segun Oloketui is indeed a consummate banker with several years of banking experience. Mr. Segun Oloketui was the immediate past managing director and CEO of Wema Bank. With the number of years he put in the banking industry, he is able to tell us how the banking industry have come up and how they view the fintech that has come also to impact the traditional banking space. Mr. Segun Oloketuyi was, prior to becoming the MD of Wema Bank, he served as General Manager, Executive Director of Skybank PC. He also served as DG and the corporate commercial market of Polaris. He's a fellow of the Institute of Chartered. He is a distinguished personality in terms of traditional banking and presently of the fintech, which we are about talking. He is the present chairman of CharmSwitch Limited, a key player in the fintech space. It's therefore my singular honor to invite Mr. Oloketuyi to speak to us on the topic, an overview of the Nigerian fintech sector and its framework. Mr. Oloketuyi, the floor is yours.
Good morning. Sorry. Good afternoon. We're in two different time zones. Good afternoon, distinguished ladies and gentlemen. I would like to especially express my deep appreciation to Royal Heritage and particularly to Prince Aderemi Adekile for inviting me to be part of this webinar. It is a good time to talk about this sector, this emerging sector in a financial space. Thank you so much. I have 15 minutes to speak. Particularly, I was asked to speak on how fintech actually has either disrupted and contributed to the banking space in Nigeria. I have a couple of slides. I didn't know I have 15 minutes to speak, so I would try as much as possible to do justice to the sub-theme of this whole discussion given to me to speak about. So I will do a quick run through some of the slides and then concentrate on the sub-theme, the actual topic given to me to speak about. I have a presentation. If you can share my presentation if you have it. Sorry, I can't hear you. You are muted.
Yes, we're trying to share the slide now.
Okay, thank you.
So if you may, you may just continue while the slide is shared. We're having a little bit of technical hitch, but it will come on in a few minutes. Okay, you may go on while we...
Okay. Thank you. I think it's, talking about this topic, we're talking about fintech and the financial services industry. That's I think particularly banking in this webinar. It would be nice for us to draw some explanation about what traditional banking is and what a fintech company is. Traditional banks are financial institutions, as we know, that are permitted to take deposits from individuals and from corporate organizations, from businesses. And they use the funds they take to provide loans to customers. Banks offer some other services, which includes wealth management, safe deposit boxes, and currency exchange. Please, if we can put this in a slide mode, it will be so that it's bigger. Slideshow, I mean. Good. Okay. I was talking about comparing traditional banks and fintechs. So traditional banks are permitted. Usually they are licensed. A license is given by central banks in different countries or national government in some other countries. And principally, the license allows them to go out and take deposit. And these deposits are further given out to customers in form of loans. And they provide some other ancillary services, wealth management, safe deposit boxes, currency exchange, amongst some others. And banks can either be, in some cases, like in our own country, we have deposit money banks that are, I mean, we have commercial banks, and then we have investment banks, otherwise called merchant banks. And like I said earlier, this is a regulated business and regulated by the Central Bank of Nigeria in our own country. Fintech, on the other hand, is a term used for companies that have used technology to provide financial services. I heard Prince Adekile in his opening remarks saying where financial services and technology have come together. That is what fintech does. So fintech is a term that refers to technology that allows business owners, companies, and customers to effortlessly manage their financial transaction. That's the simple description or definition of fintech that I would like to give. So please put this in a slideshow. You've taken it back. It was in a slideshow, unless there's a problem handling that. So globally, we have, it's been estimated, we have over 1.7 billion unbanked people. In Nigeria, we're dealing with an adult population of over 38 million. Of over 38 million people unbanked. Now, why do we have this huge number? We have this huge number because traditional banks have been unable to spread out and make available their products and services to every nook and cranny in most countries. And the obvious reason is because of a lot has to do with the cost of setting up. To set up a branch of a bank in Nigeria, you know what it means. Apart from the real estate investment, you also have to do investment in power, do investment in all of the things that you need to keep that business running, including security. So taking banks into every nook and cranny is a major issue. So by that arrangement, a number of people have been excluded. So what this then means was the fintech saw an opportunity with this huge number of our bank to start to offer services, albeit some banking services, so to speak, to this unbanked population. But as this as fintech evolved and continue to improve, it's gone beyond even the unbanked. Even the bank today have latched on to services provided by the fintech. Sorry, we're having issues with this present. Okay, sorry if you can't do slideshow, it's okay. I'll go on, sorry. Go back to the other slide, please. I have 15 minutes and I don't want to overrun my time. The slide before this. Yes, please. Okay, with high, why do we have such huge number of unbanked? 36% in Nigeria. It's because high poverty rates, because people don't have so much. The requirement to open bank account in the old certainly excluded some people from banking. I have mentioned high bank branching costs, lack of identification to open account, which is still a major challenge. To open an account, you need identification. But the central bank has done a whole lot just to speak to financial inclusion by lowering the requirement to open accounts. Some category of accounts can be opened today without necessarily having a driver's license, an international passport, not even a voter's card. But that is capped at some level of transaction and some level of money in that account, just to begin to address financially excluded people. Bureaucratic onboarding process also as worked against a number of people having bank account. Of course, you have mistrust where people are not even sure. By level of education, if I put my money here, will I be able to get my money when I want it? Of course, we've had issues in the past where we had major bank collapse, and that had also scared some level of people away. People lost money, and really trust is a major element in a customer banking relationship. And if trust is breached once, it's difficult to bring people back to the fold. High cost of loans and difficulty actually in obtaining credit is another issue that has excluded people. Some people want to do open bank account because they need support, but because they don't have what it takes to get that support, they are out of it. So limitation, regulatory limitation has also contributed to exclude some people. In some clients, like we've had the example of Kenya, where we have the telco-led arrangement where telco actually can provide financial services. What that did was to bring in a lot of people. All you need to do is to carry a mobile phone, and a lot of people carry that today. When I was looking through data for this presentation, I was a bit alarmed that we have NCC actually said Nigeria has over 195 mobile lines. If you look at that over the population of Nigeria, it's about 90%. So in Kenya, I imagine what that figure will be. All you need to have is a phone, and you have access to financial services on a platform called M-Pesa. So a number of, we also came up with payment services, banks in Nigeria, but then they are also excluded from these other things. That exclusion also has excluded some people looking for those services who could have, ordinarily be their customers. Please, next slide. In 2021, over $800 million have been brought into the fintech space in Nigeria. And today we have over 200 of such companies rendering one service or the other. And Nigeria has become a major African hub, fintech hub, next to Kenya, next to South Africa. Kenya is number one. South Africa is number 3, number 2, and Nigeria is number 3. I have a list. I'm sure we're all familiar with the list here. The major players in this industry today, you have their names, the InterSwitch of this world, Carbon, Cowrie, Wise, and all that. So next slide, please, including Alert as a major participant. I will leave this space for Mr. Demola Adebishi, the current MD of WEMA, so that I don't go into his space since he's here to speak to us. We can skip Alert and move on to the next slide. Okay. What has actually helped in the evolution of the fintech ecosystem is the prominence of mobile payment. And if you have a smartphone with you, in fact, it's even gone beyond a smartphone. If you have a phone with you, you can do a USSD transaction. All you need to have is a phone. So the the prominence of phones all over the world, and particularly in Africa, mobile phone has helped the fintech sector to actually push their services and their products to the banking public. There's also a lot in the startup activity and innovation in the fintech ecosystem. Push for financial inclusion by regulators is also an added advantage. The regulator is pushing. I think the target was in 2020. We have missed that anyway. The unbanked population should be a maximum of 20%. That was what we have in the financial inclusion policy program of the Central Bank of Nigeria. Today we're about 36. We moved that push has also helped a lot of people coming up with innovation, coming up with fintech services. Now, I'll go to read the Mayo subtopic, which is the traditional banking versus the fintech. Like I said earlier, banking before fintech is characterized by brick and mortar, which includes lending services, foreign exchange transaction, providing guarantees, remittance of funds, credit and all of that, credit and debit cards, and the use of ATM. The rise of fintech has led to the loss of some of this business in the banking space. And why the loss is those who have been excluded by the way banking transaction is conducted. The fintech already have a ready market in them, and they begin to pitch their own services to this unbanked population. But like I said, it's gone beyond unbanked. Fintech has actually taken over a major part of consumer banking business. So they do this by offering these services seamlessly. We know what it was in the old. To take cash out of your bank account, you need to go to a bank, physically go there, stand in the line in front of a cashier. If you're lucky, it can take 30 minutes. In the days of tally number, it takes ages, even for you to be able to take money out of your account. So what fintech has done is to simplify the way money transfer and the use of taking money and spending money is done. From the comfort of your phone today, you can wire any amount of money you so desire to someone else. Now, when we talk about fintech versus banking, sometimes people think some people versus the other. Fintech versus banking. I want to take a different view. And my view is you can have fintech revolution within your banking institution. And that was what happened to us in Wema Bank, where we decided to create a platform that would have all the trappings and everything that a fintech company has to be able to handle the need of our customers seamlessly. So disruption can happen from within, disruption can also happen from outside. So the fintech, some people have seen what technology can do and then created companies, now called fintechs company, to begin to provide services that banks ordinarily can provide. But what banks have also done as reaction to this is also to have disruption within their own system. And I have given, without much laboring much on this, Wema Bank that I work with my last 9-to-5 job, if it was 9 to 5, created a platform that has all the trappings of a fintech as a response to what we're seeing in the fintech industry. Next, please. So what fintech has facilitated the sharp increase in financial services. So what this has meant in terms of disruption, in some of this data, they're a bit dated. Nigeria saw a sharp increase in number of people with accounts with various financial institutions, increasing by about 43%. If you look at the right hand of this slide, 43% between 2001 and 2004. This has been attributed largely to adoption of technology. Adoption of technology propelled by what fintech people are doing. So we saw a huge rise of 43% between 2011 and 2014. Of the 45 million new accounts opened with financial institutions, the World Bank projects 75% are in rural areas. And why? Because of the use of technology. So technology is now able to reach the rural people, and they can begin to participate in banking transaction by opening banking account. Banks today is common knowledge. It was new. It was something very novel a few years ago when Alert was launched, and we made a promise at the time that within 5 minutes, you actually can open an account and start to use the account. And a lot of people were a bit skeptical about that. I know a bank MD, I'll keep his name in this discussion, who actually got onto that platform, opened an account, and transacted business in the account. Just to confirm that this is possible. That is the sort of thing that fintech do. If you look at the slide, between 2014 and 2017, there was a drop. And one would be wondering, we had a sharp rise in a 3-4 year period, 2011 to 2014. What then happened? 2014 to 2017, that we also had a dip. This was when BVN was introduced into the banking system, and a lot of foreign accounts were shut down. But after that cleansing that was done, then it started to gather steam again. So the number of banking accounts has started to increase. In 2021, it's gone up to about 45.14 million accounts. Please, next slide. So, like I said, in spite of all of the push that we have seen, we're still short of the financial services policy, which put the target for those who are excluded from banking at 20% of the population. But we're still far away from it, we're somewhere between 36 and 38%. So fintechs offer non-traditional models, such as social media, chat bots, prioritizing 24/7 access over what banks do, called brick and mortar. Fintech, actually, the way they set up is to look at the pain points of customers. When we were going to launch Alert, what we did was to do focus group all across the country. Target are the excluded, target are the youth, and we spoke to them across the country, north, south, east, west, and south, everywhere we went, to find out. Simple question we asked: if you were to set up a bank, or if you were to have an input in how a bank should be set up to meet your services, what would the bank look like? And they gave us the blueprint for that, for Alert. They don't want to go to any bank to open an account. They don't want to go to any bank to move money. They don't want to go to any bank to even get their card. So if you are a customer of Alert, your first card is deposited to you in your address. You give us an address and it's given to you. And we promised to do that within a few days, and that was done. So they gave us the blueprint for Alert. So when you develop a product for the perspective of the consumer, what they require, obviously, you have a successful product in your hand. Little wonder that in a couple of months, we had over 250,000 new accounts, unique new accounts open under Alert. That's what fintech does. They look at the pain points in services offered by traditional banks, and they develop products and services to take away those pain points. So fintech, like I said, often target underserved customers. Underserved here could be services, underserved here could be products, underserved here could be even ability to open an account. And they leverage on technology such as API to do what they offer. Next slide, please. So within the ecosystem we have in Nigeria, what are the opportunities that are available? So there are future opportunities within the Nigeria space. The launch of mobile payment platform. This has been a very tough discussion, whether we should have the mobile-led or we should have a bank-led. So we have a bank-led mobile payment system in Nigeria, and that's why penetration hasn't been as much as it should be. And I know the feeling of the regulators, why they want to stay where they are. We've seen the pitfall of telco-led in some other jurisdiction, where a lot of the resources are out of the banking space, where their business are not as regulated as it should be, where banks are starved of deposit and then they can provide loans to the real sector. Those are some of the pitfalls that they saw. So, but then there has to be some midpoint. If indeed we want to get everybody served in the banking space, between a bank-led system that we're running today and a telco-led payment system. Increased adoption of the blockchain and cryptocurrencies is also an opportunity. I also know that the regulator have their issue with cryptocurrencies, but I just say here that we're just running away from reality. There's just nothing we can do about it. My advice to regulator is actually to school ourselves, get involved, and get to know what this is. The rest of the world are moving. I was in a mall recently. I actually took a picture. I wish I shared the picture here, where you have a machine, and the machine says right inside the mall that you can do your cryptocurrencies transaction on that platform in a mall, advertised, so it's allowed to be done. I know Australia has brought in cryptocurrencies into their financial space, and they are finding a way to regulate the use of that medium of exchange. So our response in Nigeria is say shut down all these accounts in banks. I really don't think that is the way to go. The way to go is to get involved, get to know what is happening. We can't run away from it and find a way to properly regulate it. The use of artificial intelligence powered by Fintech provides also some opportunities. Opportunities, collaboration between telco and banks, opportunities, telco bank enabling Fintech companies is also an opportunity that we can explore. Please, before I run out of time, next slide, please.
So we truly appreciate if you could round up in the next 2 minutes. Sir.
Okay. Well, I will leave the opportunities. I have this slide that can be shared. I just have a parting position here. In 1994, Bill Gates says there will be banking, but there may not be banks. And when that statement was made almost 3 decades ago, it was far-fetched. People thought, what's this man talking about? But some people have I would say, the crystal ball. They could see into the future. So what had happened in other industries in terms of disruption, it's happened in transportation industry. Today, Uber is in every nook and cranny of the world. The taxi business is getting a terrible hit. I know what they did in the UK, protesting, the black caps in the UK protesting against Uber. So Uber has taken a business just with technology. Amazon with technology is doing a whole lot in the retail space. And airlines have introduced technology to take away a whole lot of things that were done manually before. Buying a ticket today, checking in yourself, you actually can walk through from beginning, buying a ticket and get it into the aircraft without the intervention of anyone, just with technology. So for banks to think technology will not destroy what we're doing is a dream. So certainly what had happened, and I keep so much, I evaluate this statement again, and I look at the trend that is going on in banking and in the fintech space. Banking will continue to exist, but banks, in the way we know them today, in just some years to come, you may not see them in this form. Ladies and gentlemen, more to say. Unfortunately, time is against us. Thank you very much. I appreciate it.
Thank you very much, sir. We truly, truly do appreciate the insights to the topic. And there is no doubt that you did quite a lot of justice to the topic. I am particularly excited as to the approach you took in addressing the issue about the disruption. For you, it's not about them and against, fintech against banking. It's rather that of trying to work together. And I congratulate you for being at the forefront, or also with your leadership then at Wema Bank, and what you have done with revolutionizing banking with the Alert platform. It has indeed been one of seamless banking for those of us who are associated with it. So I congratulate you and I thank you for the opportunity to hear from you and to share knowledge as well. I want to say that we would appreciate that attendees please drop their questions in the question box so that we take all of them together. We are struggling to work with time so that we get to hear as much of the speakers as we ought to, and then at the same time allow time for them to answer all their questions. A few questions had comments for you, but I would shift that for the question and answer session so that we get to hear also from the next speaker who happened to be from the regulatory body. I noticed you in the course of your presentation, you commended them for the regulations they are bringing out, and then you dropped some word of advice for them as to how to deal with the issue of cryptocurrency in the light of what is happening outside the country, because Nigeria is not in isolation. We also have to work with the rest of the world. So it's on that note that I would humbly introduce our next speaker, who is Mr. Kofo Salam Alada. Mr. Kofo is the head legal services in the Central Bank of Nigeria. It needs no further introduction to us to note that the CBN is the core regulatory body in the fintech industry. So it's indeed our honor and privilege to have Mr. Kofo Salam, who is the Chief Law Officer in the Central Bank of Nigeria. Mr. Kofo heads the Legal Services Department of the Central Bank. Previously, he headed the CBN's Consumer Protection Department. So, of course, we will see the balance here, that having been at the Consumer Protection and now heading the Legal Services, there is no doubt that he is the one to strike the balance that is much needed. He participated in the drafting of key legislations and regulations and guidelines on banking and finance, including the Banks and Other Financial Institutions Act of 2020. Mr. Salam Alada played critical role in the banking sector reform of 2009. He's instrumental to the setting up of the AMCON, the Asset Management Corporation of Nigeria, and he's also AMCON's first acting secretary. He needs no further introduction. It's on this note I want to humbly invite the person of Mr. Kofo Salam Alada to speak to us on the topic: what steps have the government taken to mitigate potential risks on innovations such as money, mobile operations, payment service banks, and online lending in fintech industry? Mr. Alada, the floor is yours, sir.
Thank you, Dr. Agu. And I want to thank my brother that kickstarted this, right from the managing partner of Royal Heritage, whom I thank for giving us this forum and opportunity to espouse a little bit of what a regulatory institution like Central Bank is doing in the fintech world. It's a new ecosystem, but it is here to stay, just like Mr. Oloketui. I rather even call him Chief Segun Oloketui. Nice seeing him again now, albeit sporting a grey goatee. I doff my hat. A doyen of banking will always be a doyen. Nice seeing you. Actually, in anticipation of what a board member or an ex-banker, a former MD will say to a regulator, we had actually prepared to actually take on the vexed issue of the regulatory agency role on cryptocurrency. I would have started from there, but I will still reserve it for where it belongs. For us, it is critical, but not that important. It is novel, but it's not new to us in Central Bank. Coincidentally, I almost served at cost to do a paper in 2016, 2017 signposting what is to come in the cryptocurrency world, where we were talking about blockchain technology and its applicability to the banking sector. Then we advocated that cryptocurrency can never be a currency, and the Central Bank of Nigeria is mandated to actually, issue the legal tender currency and maintain external reserve to protect the value of this domestic currency issued. It is this mandate that Central Bank pursues, apart from the primary mandate of ensuring price and monetary stability. Our time is limited, just 15 minutes, and I intend to actually keep within that, God permitting. So, in that role, we saw in our paper then that cryptocurrency should be treated as an asset. And thankfully today, if I was in the academics, maybe this will have been cited worldwide. Most of the economies are actually now treating cryptocurrency as an asset. In that paper too, we called upon Security and Exchange Commission to do so and treat it as an asset, even in form of a security, which that institution was mandated to regulate. And thankfully too, we're all aware that just a few months ago, SEC issued a guideline to moderate digital assets, including cryptocurrency. So it is not new. Nigerian regulators are not shying away, and we are ready to meet it headlong. Suffice it to say that following the central bank announcement on cryptocurrency, other countries, even developed countries, they followed suit. You recall that China actually took the similar step, to what central bank did about cryptocurrency. However, let's just say today, there is no guideline, regulation, directive, or circular issued by Central Bank of Nigeria that outlawed cryptocurrency. We only say, please, bankers, stay away from them for the security and safety of the Nigerian system. I will actually want to relate these steps to what? To the topic of the day. What are the steps that governments, well, they say government, but I will speak about my institution, taking, to mitigate potential risks on innovations as MMOs, PSB, and online lending fintech. Mr. Loketu has actually spoken extensively on fintech. I'm not going to start defining fintech for us. We know that, but we only want to look at the relevance, of these to the financial sector. And for us, innovation and technology, the importance of this, it cannot be overemphasized. It has come to stay, like I said. I recall the Industrial Revolution came with its nuances. Now is the fourth revolution, fourth industrial revolution for us in the industry is the fintech. Do we need to be bothered? Yes, we need to. With all the advantages that come with technology and innovation, especially in the fintech world, remember during the COVID, we were locked down, payment system actually soared, you recall. We did not need to step out to buy stuff. We had to use the payment system. And thankfully, Nigeria, as we know, and we are proud to also say that since the introduction of cashless system in 2012 by Central Bank of Nigeria, the growth of transactions in the payment platforms that have risen since that time have also grown exponentially. So, but when we're talking about why should regulators be worried about what happens in that climate, let me just give you an example. In May 2021, well, you recall that the American system, energy system, was almost, brought down, when the major US fuel pipeline was cyberjacked, forcing some payment of ransom, from a criminal gang known as the dark side. That is the general one. Back home, a Nigerian, one Salahu Abdulmalik Femi, actually, SFU of the Nigerian police came up with that issue. He hacked into banking system and defrauded the system of so much money. We're also aware of the shutting down of so many crypto exchanges and people being denied of their fund. having signposted the various risks. These are not the only risks. We'll be knowing some of the risks later as we delve into the steps taken by Central Bank of Nigeria to mitigate all these risks. I will just outline, in case time will not permit us to go through everything. CBN, has intervened through various means. One is through the introduction of regulatory sandbox. That is to tell you that we're interested in what happens in fintech world, and these are now, we'll be going into detail of that. Through competition as well. Coincidentally, my former world as Director of Consumer Protection, we asked us to be interested in this. Then another step is through our enhanced anti-money laundering and combating of financial terrorism and KYC. Mr. Loketu actually alluded to that when he was talking about opening of accounts. We now have different tiers for KYC requirements when you want to open account. And all these also apply to payments on the fintech platform. Then we have specific guidelines. The one that was issued for a subject matter like this, and is known as the Guidelines on Nigerian Payment System Risk and Information Security Management Framework. I believe the director NITDA will be speaking to some of these. These are some of the areas where we have a crisscrossing, of regulatory oversight on this issue. And permit me to also quickly say that fintech is just that area where no single regulator is in charge thereof. You have the NCC has its role there, SCC has its role, Central Bank of Nigeria has its role, the NITDA has its role, and FCCP has its role to a certain extent. I think if we want to more resources in this area, we'll be advising that anybody interested in fintech will need to try to find out how all these regulatory agencies will impact on their activities. Other things that central bank, and under this particular framework, we consider the various types of risk: systemic risk, credit risk, liquidity risk, operational risk, legal risk, settlement risk, and especially information security risk. We'll be talking about that shortly. Then we also, at the end of this, look at the various steps specifically for central bank to mitigate this issue. Regulatory sandbox, let me just go back quickly, maybe in the last few minutes permitted for us now. Maybe I still have about 6 or 7 or 8. Permit me to take 10. Regulatory sandbox. This is a confluence of the regulator and potential innovators in the fintech world. We encourage them to come inside, sit down in our environment, work on your innovation, and as you are working on it, we are looking at what are the regulatory concerns that will be arising from what the innovator is doing. And what is this to do? Is to ensure that from day one, the risks are actually mitigated, before the products actually get outside there. And a regulator actually, in intervening in this area, we need to look at what? 4 areas: the scope of the innovation, the scale, how wide it's going to be. And remember now, because it is internet and technology based, the scope is actually, you can never limit it again, and that is why we have you have state or unit microfinance bank now. I can have my own at Ikare, and yet from here I can actually operate the account of the microfinance that is located at Ikare in Ondo State. So then the digital products. What digital product is the fintech offering? It should be of concern to me as a regulator. Then also, even for me as a consumer protector as well, central bank as a consumer protector, which is now enshrined in the banks and other financial institutions in section 30, I should also be concerned about digital behavior, not only of the patrons and consumers, but of also the people who bring these products to the market. That was just an aside. We're talking about regulatory sandbox. So that way of our involvement, we look at the risks ahead of time. And we all know that the objectives of sandbox is to ensure that these products get to market on time. We ensure consumer protection standards, safeguards are put in place. And also it provides avenue for regulatory engagement with fintech firms. Competition. The fact that a fintech or a service provider knows that is exposed to competition, is bound to put in place, is bound to ensure that his consumers, the consumers of his product, are protected against risk. So what we try to do with regulation is to create a market entry barrier, making it difficult for innovation companies, in entering the market. So when we put these innovation entry barriers into the system, we are also already looking at who or who cannot provide the best service to consumers. The Central Bank of Nigeria mandates innovative and fintech companies also. That is for AML and CFT, including MMOs, mobile money operators, payment service banks, to comply with our anti-money laundering and combating of financing terrorism and KYC requirements. So that way, we try to hedge against risk for the consumers. Then we mentioned consumer protection. Recall that the Central Bank of Nigeria in 2016 issued the Consumer Protection Framework. And following this consumer protection, in 2019, 2020, thereabout, the bank issued the Consumer Protection Regulation. And chapters in this regulation were also devoted, to responsible business conduct, transparency and disclosure, data protection, which NIDA may be talking about later today as the authority regulating data management in Nigeria. All these are some of the steps in mitigating risk in MMO and PSB and their lending. I've mentioned responsible business conduct. It also refers to responsible business lending. And lending, as we notice, most of us must have been receiving messages on our phone of creditors who are going after our contacts on our phone that Mr. A has borrowed and will go after you if you do not get the person to pay back. That is irresponsible conduct in lending. These are some of the things that the central bank and FCCP are actually working to stem now. Now, guidelines. I will commend to all participants the guideline known as Guideline on Nigerian Payment System Risk and Information System Management Framework. It was therein that we have all these issues. We examine all the risks that MMO operations will portend in Nigeria. We also have specific guidelines on mobile money services in Nigeria. There also we have risk management regime. Permit me to quickly run down some of the steps that we have put in place there. The peculiarity of the operations of MMOs, and some of the unique risks that you can have for its operation require that there should be special steps. What have we done? We now require MMOs to take steps to introduce risk mitigation techniques, so as to be against, to prepare against liquidity, technical, fraud, financial, and money laundering risk. Because mobile money operators are actually susceptible to most of these failures. So we require that a risk management officer should be assigned, by an MMO, at a very, very high level. Then we also, that CBN also from time to time, we review the risk management program of the MMOs to ensure that controls are in place to protect against any of these risks crystallizing. Apart from what we have just mentioned, credit and settlement risks too are supposed to be mitigated under these guidelines. Then we have under the guidelines that MMOs should put in place business continuity risk in case there is a catastrophe, on the premises or on the operations of any mobile money operator. They are supposed to have put in place business continuity program to ensure that the disruption is not, the impact of the disruption is actually minimized. So the provider too is expected to test the effectiveness of their backup infrastructure from time to time. So other provisions of the guidelines, are the fact that the users should have their PIN, they have their password, they should store all these very clearly, very, very well, and not compromise them. Then for card transaction, well, that MMOs use card transaction. You have different layers of authentication, against the originating card management system technology. We're supposed to also ensure there are persons that want to relay with us are actually well registered. For the POS transaction guys are supposed to be well, you're supposed to know them, perform KYC on them as well. And data protection, we expect them to manage data very, very well. That is all about MMO. All in all, there are so many steps put in place by Central Bank of Nigeria to mitigate against risk that may arise from the operation or the mobile money operator. For the payment service banks, a payment service bank is like a crossover between the brick and mortar, as Mr. Segun Olokoteyu said earlier on, and the telco. He mentioned the fact that there was that controversy whether we should have bank-led or telco-led operation in the money market environment. But eventually, Central Bank came up with the idea of payment service bank. And similar to the MMOs, we also have guidelines. In our guidelines for licensing and regulation of payment service banks, all the steps that the banks, the PSB, are supposed to put in place to ensure that risks are mitigated are also there. Especially, let's mention, for your money or transaction there to be safe, we mandated PSB to actually maintain not less than 75% of their deposit liabilities in government gilt-edged securities, treasury bills, and other short-term federal government instruments because of the safety of such instruments. We do not want them to go and play. I don't want to promote any betting company. We don't want them to go and use your money to start playing Chacha on EPL, with Arsenal still leading now and will continue to lead. Meanwhile, there's also cash reserve requirement for them, for PSB, and they're also expected to implement appropriate controls to ensure that there's strict confidentiality of consumer data information, because data is becoming critical now. Now, of importance to us will be the final one, which is what are the steps for mitigating risks for online lending for fintech? It is necessary to actually clarify that anybody who wishes to carry out business of money lending or so, people also get money lending licenses in the 36 states of the Federation. And the Central Bank is actually working on trying to create a nexus, between the operations of these money lenders and finance companies in Nigeria, But we all know that microfinance banks, they do lend, finance companies, they do lend, and we know the importance of these companies to the growth of micro, small, and medium enterprises in Nigeria. So they grant such many loans that ordinarily DMBs will not grant. So, and we also set out what are the permissible activities for MFBs, for lending. Many MFBs now run as fintechs, in order to have very, very great and wide reach. So finance companies and MFBs, like we said, are online. For finance companies, we have also revised the guidelines, for them in Nigeria, and they are in there too, just like the mobile money. We have entrenched in the guideline also risk mitigation requirement. We've imposed maximum lending and borrowing limit. We impose maximum ratio of NPL as well, just as we do for DMBs. There's a ratio between the NPL to total gross loans. Then we have requirement of compulsory development of enterprise risk management framework to cover credit, operational, market, and compliance risk. Given that we have run out of time, I was fidgety when Mr. Loketui was on, but we were all prepared to listen to an erudite banker, and we were not bored by his presentation. But I do not want to also take your time, but to close by saying that the Central Bank of Nigeria is interested and will continue to be interested in the, in the safety, soundness, stability of the financial system in Nigeria. Innovation is welcome, but it should not be done at the risk of this stability of financial system, which is a core function of central bank as entrenched in section 2A to E of Central Bank of Nigeria Act 2007. So you also know that, well, people have looked at the central bank as a forerunner in the innovation or the introduction of central bank digital currency in Africa. That is a subject matter for another day. But permit me to just say that a CBDC is not a cryptocurrency. It is like a fiat money. It's like that naira in your pocket. And it's also, well, it's issued by a central bank with the backing of the sovereign. It can be trusted, unlike cryptocurrency, whose value dances like a yo-yo. And even though I could have taken advantage of the $4,000 of August 2016, 2017, to key in there what I want about the risk inherent. So, and we have people who bought at $60,000, and we know what cryptocurrency, the most popular one, Bitcoin, is trading for now. And people are losing. And people who are using exchanges too are losing their money, because people are collecting their money to trade for them, and they're disappearing with this money. The choice is anybody's. So you want to go that route, you go that route. You know, so we are waiting, and we are tracking. We have an in-house committee, technical committee on digital currency, on cryptocurrency, or blockchain. So these are innovations that we will never allow to pass without being interested in. I want to thank again the participants who have been, with rapt attention, been here for the past over one hour, and Royal Heritage again. I say over to you, Dr. Susan Agu, to continue your brilliant job of moderating this session. Thank you.
Thank you so much, sir. We, you did a lot of justice to this topic. I am, first, I must say that we didn't err in bringing you here, particularly listening to the fact that even the so-called crypto that we consider to be new and something that we're all dealing with, that you had in fact dealt with the core issues in as far back as 2016. Indeed, it's an eye-opener for us. And I also appreciate the distinction, very, very insightful distinction you made between the cryptocurrency and the e-naira, and the assurances of the backing of the sovereign that we have with the e-naira. A lot of questions, I must say, has come in for you, sir, but we'll leave all that for the question and answer segment. Thank you so much for throwing a lot of light on the efforts of the Central Bank of Nigeria. There is no doubt in that the cashless of the CBN as far back as 2012 has in fact been the very foundation upon which the whole fintech growth and innovation thrives on. And we are happy that we have officials at the CBN who are forward-looking and who are thinking out, deal with the issues as they arise. So thank you very much on that note. I want to quickly, without wasting much of our time, again, thank all our attendees and with the rapt attention with which they had followed the webinar.
Apologies, I think I got some connectivity issues there. Am I audible, and can you see my slide?
Yes, you are.
All right, fantastic.
Yes, you are.
Everybody. Yes, it's afternoon. I'm in Lagos, Nigeria, so I think that's the time zone for most people on the call. It's an absolute delight for me to be here today. I am representing my MD, Mr. Demola Adebise, and of course, I get a chance to appreciate Mr. Segun Oloketui, who was his predecessor and a visionary, one of the visionaries in banking industry that has made it possible for people like myself to transition from other industries into the financial services industry. I also appreciate all the speakers here today, the Royal Heritage family, as well as every one of you that is in the audience and listening to my presentation today. I am truly honored. My name is Segun Adeni. I'm Chief Digital Officer for Wema Bank. I'm going to be speaking today about the extent to which fintechs have disrupted and contributed to the business models of traditional banking in Nigeria. As a form of outline, I will cover a number of things in the very short time that I have. I will speak to the digital banking very quickly, digital banking and fintech landscape in Nigeria, a bit more around who the fintechs are and how they differentiate or what makes them different to traditional banks. Then I would go into some of the ways that some fintechs have disrupted the traditional banking models, how they are emerging into market dominance, There's a big question now whether fintechs have potential to be larger than banks, how technology will shape the future of financial services, what the banks are doing to adapt currently, what the future of banking looks like. And then I would land with a few points, which I would ask that we all ponder in due course. So as a form of, looking at the digital banking landscape, I think the big thing to take from here is globally, financial services today has come under intense competition from fintechs. Agile and innovative firms are leveraging technology to deliver tailored financial service offerings. Today, there are over 100 companies within the Nigerian financial fintech ecosystem. And what that essentially means is there's the need for constant disruption because dynamics are changing. There are new pockets of growth that are emerging, and those are essentially being driven by difference in consumer behavior, multiplicity of funding sources, new business models that are evolving, the fact that our population is becoming more technology savvy and, of course, more youthful, smartphone penetration and internet penetration, and then, of course, the fact that relatively we still have a largely unbanked population. The question, who are the fintechs? I'll spend maybe 30 seconds on this because I think Mr. Oloketu did great justice to that. Fintechs, I must set an academic background to start this off. So businesses that use technology to modify, enhance, automate financial services, either to serve other businesses or to serve consumers. They're rapidly changing the concept of traditional financial services. If you think through, they have made things more seamless. They have made financial services faster. They have made it cheaper relatively. We seldom have to think about transportation to our banks any longer, and they are accessible. So they've empowered consumers to take charge of their financial decisions. And of course, one thing we must not take lightly, the fact that financial literacy has now become a norm rather than abnormality before. A lot of times we have always dependent on speaking to specialists, even to take basic financial information. Some of the ways technology or fintechs have enhanced financial services is that access to financial information and the ability for consumers to be able to take decisions quite quickly. These guys could essentially disrupt incumbents, and I think this is where the conversation of fintechs potentially being larger than banks are. They're big challengers. They disrupt the business models that the financial services have in the value chain. They leverage on emerging technologies. So the concept of blockchain, APIs, cloud computing, these are all concepts that these fintechs use in delivering new services. The banks, however, are playing catch up, but the reality is it's a lot easier to start afresh with new technology than having to transition from having legacy infrastructure and technology onto those new ones. So there's that the challenge that could come with how long it takes. Now, the other bit is they can disrupt only the fintechs primarily, although focus on only the financial services, they are becoming a lot more expansive in the way that they do that. So you are seeing impact of them across many other spaces, in payments, in savings and investments, in insurance services, and what have you. Similarities and differences. I think it's important to call that out. It is the same target markets. They're after the same people as the banks. They offer financial service products to customers in the same, in different manners, but essentially that's what they provide. The big area is to look at the differences. The traditional banks require a different type of license to be able to accept deposits and, of course, disburse loans to customers. The fintechs are unable to use those. They can't accept those deposits as store of value, but they can provide services in different use cases across the financial services ecosystem. And one of the learnings for banks in that is there is a huge market just in being able to move money from point A to B. After all, how many people actually have enough liquidity for their funds to sit in banks? We all get funds into a bank account and we make payments to different people who also ride on the banking space. That's one of the areas that the fintechs have definitely gained some strength. The second bit is around the organizational structures. So the banks are primarily focused, again, maybe a legacy learning on the management of financial risk and security, whilst the fintechs have primarily been driven by the need for innovation and consistent innovation, to be honest, and they have built organizational structures to work with that. Again, when you think about it, there's the brick and mortar dependency on banks originally, and we're all now learning to follow the fintech model where we are able to provide services in a digital platform and online and accessible to all customers. The same for ease of followership. Two other differences around automation, which again is something that banks are learning, but it comes from the ease of starting from ground zero. So one illustration I always try to use around that is how easily a 5-year-old will pick up an iPad and understand how to use it and use it extensively versus a 60-year-old, because he has to initially wipe out the concept of having to write on pen and paper before he can digitize his content or his perspective. And then, of course, the last bit is around the delivery channels that are made available. But again, to sort of give some comfort around here, even though these differences exist, the traditional banks are taking very active steps to be able to challenge and displace the fintechs in the way that they also offer. So there is a bridge that is already growing between the fintechs, the customers that they serve, and of course the traditional banks. Now, a bit more into the specific disruptions that the fintechs have made. So they have been able to offer more seamless user experience across various channels. They have been able to push the regulators. I think a lot of competition that has made financial inclusion and cashless society pervasive have been driven primarily by what is going on in the fintech community. They have forced technology adoption to become the order of the day. Today, everybody talks about the future of banking is tech. I mean, there's also another analogy to say the future is now. But the big thing is that those paradigms have come because there's a new type of competition that has evolved over the last decade or thereabouts and is making everybody look at technology adoption for everything that we have to do. Of course, that has led to the need for new business models, new value propositions, customer centricity at the heart of new products and innovation that are coming out of for financial services. And then, of course, thinking through how else can we reach our target audience. That's around alternative marketing strategies. The emergence of fintechs into market dominance. Three key things have primarily driven them into, supported or been catalysts for their growth into market dominance. One is focus on building trust. So trust and accuracy, and of course, customer education in what they do. Two is providing access. So making sure that every platform, every touch point that you can imagine, there is ease of being able to have transactions follow through. And then, of course, prioritizing convenience. As traditional banks, these are some of the areas that, banks have also started to play chase or catch up on, so that we are, the pie doesn't automatically disappear to the fintechs. On the next few slides, I'm just going to speak very quickly around how technology will be shaping. So what we're seeing in financial services now is, there's a pervasiveness of digital banks and challenger banks. I think I stand here positioning and claiming or communicating very clearly our position in that space. So Wema Bank has been one of those that pioneered the transition from pure traditional play banks into digital banks. We launched the first digital bank in Africa which essentially means that you can do all your financial transactions within the comfort of your home on a banking app, but also you can onboard. So everything you would have to go into a branch to do, you can do within the comfort of wherever you are, local or international. And we've extended that now to even start looking at how we play within the business-to-business ecosystem, providing automated programmable interfaces between different companies so that we continue to play within that payment ecosystem. What the second area that is happening is we're seeing a number of niche players. So we're seeing fintechs or tech companies who are specializing in just one area of financial services. So they're looking at maybe loans, looking at credit cards, looking at payments, and essentially owning that to say this is how they're going to disrupt. And then there are ecosystem of orchestrators. These are platforms. These are your Googles and your Amazon Web Services who essentially bring a multiplicity of players offering different providing different lifestyle offerings across various verticals, transportation, food, health, but essentially staying as the heartbeat of that connectivity. So today, for example, on an Amazon platform, if you were to, on an Uber platform, if you were to order a vehicle, transportation, or I know this is not rolled out in Nigeria today, but in the Western world, on the same platform, you can place orders for food or even to help you with some of your shopping from the grocery store. So these are some of the areas that financial services industry have learned from the competition brought by fintechs, and even some traditional banks are having to make some adaptations to do that. The questions to ask: how are banks responding to this? There are a number of options that banks have considered. I think one that has become quite pervasive lately is restructuring operations into a holding company structure. And what that essentially means is the banks can then centralize business units, combine their digital technology into one specific unit outside of the bank. The bank focuses on deepening financial services. The technology business then focuses on enabling and empowering the bank to do what it does best, which is accept deposits, offer loans, and of course, manage the risk associated to that. Then the second area is learning from those fintechs, learning from those three pillars I spoke around trust and access and prioritizing convenience, and using that to improve the user experience of products. Then the need to digitize and automate. That is becoming hugely important, even within the non-customer processes. So just automating the back-end processes so that we can make commitments to customers to say zero to order on certain services will take X duration to get fulfilled. What that means, a number of things are also becoming pervasive. I thought to put this slide up primarily because it speaks to some of the paradigms that you will be hearing in many of the financial services areas. So concept of open banking, which I spoke to earlier around some of the things we are doing within our labs to transition from serving purely retail consumers to also business consumers. So we would provide technology interfaces which allow different businesses to consume banking services and offer to their own end users. Technology adoption, big thing today. Every financial services organization is looking to set aside huge budgets to make sure that they can fund some of their technology aspirations. Customer experience is an area of big focus. Looking at enhancing value propositions for their offerings, again, the same. Tailor-making products. Then learn the concept of big data, which essentially speaks to being able to slice and dice different views of customer data. So looking at new ways of reading consumer behavior, learning about their lifestyle, and then customizing products and offerings that will meet each customer at a point of need. Financial management, more around the knowledge that becomes more available. And then the super app concept, which is essentially one single dashboard, one single app, one single platform to do all your financial activities and conduct your financial services. Essentially speaking to the concept of banking as a lifestyle. In conclusion, 4 things I'd like to take away from here. Collaboration has become more important than anything, and it has accentuated the fact that fintechs and banks must continue to collaborate even more strongly now more than ever before. The players must also look to strengthen the digital infrastructure platforms and systems that exist, and get over the challenges that come with transitioning from being brownfield organizations, and maybe look at ways of running parallel systems and migrate services and customers across onto cutting-edge technologies. The third thing to take away from here, the need and continued need for personalized services. So the concept of digitizing experiences for customers. And then lastly, making sure that in all of this, we have a culture that encourages the rapid changes that come in business strategies as a result of these technological advancement. I think it's a good time to pause on my presentation today. I thank you once again for listening. I look forward to questions that may arise from here. And at this point, Dr. Agu, I'm comfortable to hand the mic back to you. Thank you for listening, everybody, and enjoy what's left of your day.
Thank you very much. I've enjoyed the session so far. I didn't know I was going to go back to school today. And this is the first time I'm in the gathering of bankers since I left the industry 21 years ago.
Wow! Wow! This is good. This is good.
You know, so this is quite remarkable. You know, unfortunately, I left when the digital revolution was just catching up with the bank. But I'm also glad to say that I've been looking at it from a different lens and indeed participating from a different perspective. Right. Indeed, I picked so many interesting points from all previous speakers, and if I were to summarize what has been said, you know, just as the cliche goes, jitter is the new oil, right? And much of the evolution that has taken place in the fintech industry may not have happened if we didn't have the opportunity to aggregate data, right, and be able to achieve new insights on a whole variety of areas, including customer behavior and so on. So for me, you know, like I said, 21 years ago, it was easy for us to, you know, plan for data. It was easy for us to say, okay, this is where data resides, maybe in the server room, right? And then you can say, okay, this is how I'm going to control access to data, right? So you don't have access or you have access. Okay, it resides in this machine. But all of that has changed, you know, over the last two decades. So data now has multiple residency, right? For the most part, it's controlled by different subjects, and there is even more, you know, profound possibilities for the reuse of such data, and that is where the issue of regulation comes in, privacy, you know, protecting data. All right, and I'm here to speak on behalf of my Director General, Mr. Kashifu Inua Abdullahi, who is unavoidably absent. My name is Bernard Ewa. I'm the Acting Director of E-Government Development and Regulations. My practice area cuts across technology public policy. Much of my work in the last 5 years since I joined NIDA is around creating regulations that push the frontiers of government in a way that enhances this interaction between government, businesses, and citizens. It's for that reason that I've been asked to speak on this topic. I have a prepared speech from the DG. So whatever I say here is from the DG. I hope you can hear me. Can you all hear me?
Yes, Mr. Bewa, we can hear you.
Okay, great. Okay. So may I ask
can
the
hear you, sir.
moderator to display the DG speech?
Okay.
As I said earlier, this is the DG speech. Okay. So it says, may peace and mercy be upon you. I would like to begin by professing my profound appreciation to the organizers, Royal Heritage Law Firm, for the Royal Heritage webinar series for the year 2022, and for inviting me to speak on the importance of data protection in the prevention of fraud and financial crimes in the Nigerian fintech ecosystem, as well as data privacy standards required of fintech operators. Both topic continues to gain currency as a result of the significant developments in the natural digital economy. As you already know, the digital economy of Nigeria is one of the most prolific and productive sectors of the economy, as the sector had experienced unprecedented growth since 2019. This is underscored by the significant contribution of the country's GDP of 12.66% in 2021, and has increased its contribution to the GDP by 18.44% in the second quarter of 2022. There is no news that a significant contribution of these statistics came from financial technology or fintech organizations. To underscore their contribution to the digital economy, 5 of them achieved unicorn status as early as 2021. So I almost repeat what has been said, but by earlier speakers, fintech operators provide digital platforms that help citizens transfer money, make payments for goods and services, access soft loans, engage in retail banking, hold virtual currencies, and invest in capital markets. One of the things I often say is that, yes, there's an interaction between technology and financial services, but the end product of that is new digital lifestyles. And so what we are actually trying to regulate, right, in terms of data protection is how to ensure that these digital lifestyles remain safe and productive. Some of the reasons behind the success of fintechs can be attributed to government policy innovations, leveraging related tech advances. Providence played a part as a result of the COVID-19 pandemic, which helped significantly increase online financial transactions. Citizens needed a speedy and convenient way of sending money and making payments for goods and services without the risk of being infected by COVID-19. Additionally, good government policies such as the Central Bank of Nigeria's cashless policy, the Nigeria Data Protection Regulation 2019, the National Cloud Computing Policy helps increase the growth of fintech operations. Furthermore, President Muhammadu Buhari approved the establishment of a Technology and Creativity Advisory Board that formulated new banking policies to include modern technology-enabled payment systems, which helps fintech process payments without being full-scale banks. This led to the CBN creating a category of license for fintech companies to enable them to operate without being overwhelmed with the regular banking license, as well as other requirements which my previous speakers have mentioned. Other success factors include characteristics and quality of investors who are investing in these companies. Most of them young tech-savvy youths. Some of these investments come from international sources. Notwithstanding these compelling benefits, the fintech industry is not free from risk, including but not limited to data privacy and protection. We can put this in statistical perspective. According to statistics supplied by the Economic and Financial Crimes Commission, EFCC, 80% of the 978 convictions secured as of September 2021 were based on cyber fraud. Cyber crimes take place more due to willful breach of data privacy. Another report by Nigeria Interbank Settlement Systems indicates that within 9 months of 2020, fraudsters made 46,126 attempts to breach data-based systems. Sadly, 41,979 of these were successful, representing 91% of the time. A survey titled "The State of Ransomware 2022" reveals that 71% of Nigerian businesses were hit by ransomware attacks in 2021, and that the cost of remediation of these attacks for 44% of businesses was $3.43 million. Ladies and gentlemen, given the foregoing facts, the need for data privacy and protection cannot be overemphasized. This, among other things, informed our decision to issue the Nigeria Data Protection Regulation, NDPR, in 2019 as a subsidiary registration under the Media Act of 2007. The objectives of the NDPR are: A, to safeguard the rights of natural persons to data privacy; B, to foster safe conduct of transactions, including the exchange of personal data; C, to prevent manipulation of personal data; and D, to ensure that Nigerian businesses remain competitive in international trade through the safeguards afforded by a just and equitable legal regulatory framework on data protection, and which is in tune with best practice. These objectives are pivotal to the sustainability of the fintech industry because they are the drivers of trust, fairness, and value. Without these drivers, it would be difficult to get people to patronize fintech platforms. Data protection regulations are not designed to function in isolation. The reason President Muhammadu Buhari approves the establishment of a dedicated Data Protection Commission in February 2022. That is the Nigeria Data Protection Bureau. It will surprise you that some of the fintech operators that operate in Nigeria do not even have physical presence in the country, nor are they registered or known by operators, which is a unique challenge because of the borderless economy that we operate today. It's one of the issues that we need to take very seriously as regulators. Considering these issues, it is important that the laws regulating fintech space in the country are adequate and regulate their operations in the financial industry. For the effective corporate governance that guarantees the sustainability of a data-driven industry such as fintech, we must also abide by other regulatory instruments. Gladly, the industry boasts of a catalog of regulations, which I do not need to mention it, most of them from the CBN and the financial industry itself. But I could also talk about the guidelines on mobile money, which has been discussed here sufficiently, the CBN regulation on electronic payments and collections for public and private sectors in Nigeria. We also have the Cybercrime Act and the just issued CBN Risk Cybersecurity Framework on policy guidelines 2022, to mention a few. NIDA is committed to the harmonious, to this harmonious approach, because that is a very potent way of achieving developmental regulations, which is the first pillar under the National Digital Economic Policy and Strategy. Though, in the days ahead, we look forward to an inter-regulatory collaboration, similar to the CBN's hugely successful financial system strategy 2020, to ensure that existing regulations are not playing catch-up with the advances in the tech space. We also need to, in formulating policies with co-creation is ideal, so that we are able to tap into the spheres of the different regulators and be able to create a coherent regulation that taps deals with the bigger picture. So co-create regulations with operators and other relevant stakeholders and adopt industry-wide risk management strategy. Such ecosystem approach is vital for an inclusive, secure, and sustainable digital economy for the benefit of all Nigerians. We thank you once again for extending this invitation to NIDA, and we wish all participants fruitful deliberations. May thank you and God bless.
Thank you very much, Doctor, for doing justice to that topic. He is a distinguished alumnus of the Advanced Management Program of the Harvard Business School, and he holds a bachelor's degree in computer science from the prestigious University of Lagos. He is a fellow of the Institute of Chartered Accountants of Nigeria. He is indeed an astute banker with a wealth of experience to share in this platform. It will indeed be our honor to have the MD of Wema Bank speak to us this afternoon. Mr. Ademola, sir, can we have you now?
Yes, good afternoon, Dr. Agu. It's nice to be on this platform. I also want to thank the law firm of Royal Heritage for inviting me to this. I must also apologize. I was also caught up in another board meeting. So that's I was trying to see how I could straddle the two together. But I made it very clear that I'm committed to this webinar. And that is why I've asked Sheikh Madini, who is our Chief Digital Officer, to sit in for me. And I believe he must have made the presentation. And I think my role here is just to ensure that I come in to say hello to everybody and then maybe share a few thoughts about the landscape, which is changing very, very fast. We are beginning to see a lot of players in the markets, and there's also a lot of funding going after these fintechs. These fintechs are definitely chipping into the traditional space, and one way to collaborate, one way to ensure that we continue to exist is to collaborate in an ecosystem, and that is basically what we're doing. I believe Shegun has already given a presentation in terms of how business models are being changed by the second, not just by the day now, it's by the second. A number of cases that we can refer to. But in our own space, what we're trying to do is we also know that, yes, banking, the face of banking is changing very, very fast. There are schools of thought that believe that banking will not be necessary in future, but my view is, well, banking will be necessary, but not in the form that we're doing it. And so that's what I would want to say at this point. Maybe we'll probably leave it to question and answers where I can then chip in a few more. So without having to repeat what my colleague has already presented in terms of how business models are changing, I would want to stop at this point. Thank you very much, madam.
Thank you so much, sir. We are indeed honored to have you speak to us, albeit for a few minutes. And we are also confirming to you that those you had sent to speak to us on your paper did justice to the paper. We learned a lot from you, and we have quite a few questions. We indeed would want to learn from the alert progress. I mean, it's something that every one of us, and especially those who play in that sector, want to learn. So we're happy to have you here speak to us, and we will take more of that in the question and answer section. Thank you so much, sir.
I think I would also want to use this opportunity to pay homage to my boss and my predecessor, Mr. Shegun Oluketui, who is also on the platform today. He's actually the visionary of the alert, so I think he'll be in a better position to even tell us the story about alert. Thank you very much.
That's humility, sir.
So you're having paying for the prize of two in one this afternoon.
It will be our honor and privilege to have Dr. Brima speak to us this afternoon on the topic: what are the current possible future opportunities in the fintech industry for investors, stakeholders, and startups? And how has fintech contributed to the economic growth of Nigeria? I mean, all we've done here is to look at the past without looking into the future, you will agree with me that we would not have a balanced session. So we would want to have Dr. Brima speak to us and take us into the future, and take us also as to the opportunities that are available for investors and stakeholders. Dr. Brima, it's indeed our honor to have you on this call. You have the floor now.
Thank you for having me. It's a pleasure to be here, and it's a pleasure I'm humbled to be here with presence in the company of Mr. Debishi and Mr. Lekwiti, who are my bosses in the bank. So let me just start by saying that when you look at the economy today, I think three areas are really very vibrant: the entertainment industry, the Nollywood industry, and then the fintech industry. Last year, fintechs brought in $1.3 billion into the economy. And when you look at FDIs for last year was just $4.8 billion. That means that the fintechs did almost 40% of total FDIs, which tells you that that is a sector that we need to pay a lot of attention to. And the way I'm going to approach this is, see, there's no way we can increase that without looking at issues of regulation and the environment in total. So to the myth, people think that fintechs don't like regulation. I think that is totally wrong. As a matter of, if financial systems are stable as the regulations that govern it. So regulations are important. They are necessary because they provide context for how a business will run. It also provides comfort for investors. So where there's regulation, investors know, oh, these are the do's, these are the don'ts, and it gives them a lot of comfort. It helps them to bring more money into the system. When there are shocks, it scares investors away. So when we're looking at the future, those are issues that we need to really address. And I will say that one of the problems with the conflicts we have is the fact that we have a generation that's very innovative. When you look at the millennials and the Gen Zs, and the reason why they're innovative is the fact that as kids, when they start asking questions, why, we answer them. In my own generation, when you asked why, you got AK-47 slaps and knocks right away. How dare you ask why? They are now innovating and they're entrepreneurs and they're asking why. They're not asking why because they're challenging the regulators. They're asking why because they want clarity. And I think that what can grow the ecosystem is engagement by regulators and operators alike. For us at the association, one of the things we try to do is to set up a forum called the Regulator Forum. The Regulator Forum means that regulators and innovators will meet quarterly to try and look at the ecosystem. It's still a young ecosystem, but I think that engagement is critical to be able to address a lot of issues. I mean, earlier on, the director has spoken about the issue of online lenders. Way back 2020, as an association, we saw the problem that there were two categories: those licensed by CBN, those licensed by state governments, and those licensed by state governments, they don't have, were not really regulated. There was no oversight. So we worked together with industry players and developed a standardization document that can be used by players within the digital lending landscape to prevent the bad ones amongst them. But what we get, we got a pushback from regulators. We think that engagement is critical to be able to grow this system. So when we're looking at the future, what can grow the future is the fact that investors have confidence in the system. Investors don't like shocks, So right now you have people who have invested and there are shocks because FCCPC is telling payment systems don't allow digital lenders to operate unless they meet these conditions. And we're saying that, if you're licensed by CBN, should you be in that category? No, CBN already has all this information. Why is FCCPC asking for that? So you see, they want clarity on those things, and you have a situation where the main regulator is being quiet about it. So those are factors that will affect growth. So let's come to growth. So when you look at the fact that almost 40 million people are yet to be financially included, that's a huge market to look at. It creates an opportunity for tremendous growth. So if $1.3 billion came in last year, there's no reason why we can't triple that amount and even 10 times that amount coming into the system, because we're just looking at payments and lending mostly attracting this funding. The verticals have not even been scratched at all. The agri-tech, the insure-tech, the health-tech, the health-tech, the prop-tech, those are areas that have not been addressed at all. So the opportunities for growth within the fintech space is huge and enormous, because all these verticals can ride on existing infrastructure. So, I mean, payment is critical for all this to operate. And I think we're one of the best payment infrastructure in the world. I would say that boldly, because, I mean, when you hear them talking about instant payment now in America, you wonder, we've been doing instant payment for 10 years now. It's like something that you just even don't think about here. So there's a lot of opportunity within the space. I mean, there's a lot of move. We must commend that. I mean, the fact that we have payment system department today, it's a huge leap. And what we would like to see is more engagement. We can sit together, work together, develop, resolve frameworks, policies to go, because that's the generation that we're. So the sociocultural mentality of the generation that is innovating and driving the fintech system cannot be totally thrown away when it comes to regulation. Because innovation will always be ahead of regulation. And the only way to bridge that gap is for us to engage one another, to talk. And I think one other thing that's really important that would help the ecosystem, because here in Nigeria, to have a license, you need there are various regulators. I mean, you could, in some climes, you just apply for a fintech license, you have your app, and you can do various things on your app. But now, if I'm doing payments, I go to CBN. If I want to lend, I have to get another license within CBN. If I want to do stock trading, I have to go to SEC. So there's a need also for interoperability amongst regulators that will help. Let's take for example, we had worked with SEC to develop a fintech roadmap for the capital market, which included recognizing crypto as digital assets to create so that operators can register. And I know SEC had already started working on that. And then CBN comes to the circular and says, no, exchanges cannot run bank accounts. If there was interoperability, I'm sure these issues will have been resolved. Now, the question is, SEC has issued the regulation. We need CBN to also speak and say, if you're registered, your accounts will be released to you. That's we have on that. So that interoperability is required to give investors comfort to be able to grow the ecosystem. I would say boldly, this is the space, the fintech space, the space to be. Nigeria is the place to invest. 200 million people is a huge number. And like I said, the verticals, we've not even scratched it. So the space is huge for opportunities, for growth, and for investment. So for us, it's we're open to work with all parties. So collaboration is key. And for us to be able to grow the ecosystem. So at the association, we have 21 sectors represented. So collaboration is key, including incumbent banks and all players and service providers. So for us, the growth of the economy is critical. And this is a space where we can actually generate foreign exchange to be able to meet some of our foreign exchange challenges that we have today in Nigeria. So the fintech space, I think it's a huge space, and we're happy to be here. Thank you.
Well, thank you so much, sir. Thank you for that very, very well-managed time in speaking to us and indeed doing justice to the topic. We appreciate your the suggestion that there is need for collaboration in the light of the present multiple regulatory agencies from both the federal government and the state government. And gladly we have the people from CBN and the regulators. I'm sure they hear this and they're likely going to work on it as we progress. Thank you. And I think with this, we have been able to come close to the end of the sessions, except now that we are progressing into the question and answer session. And I must say that I have a whole lot. We can only do as much as the time would permit us to do. Let me start with so many of the questions really. Some of them are targeted, some ask questions and they were direct as to who they want the question to be addressed to. Others have also asked some general question. So I would kindly invite all the speakers as I ask the questions, I would perhaps invite people to address them if the questions have been specifically addressed to them. I have a question here who says, the question is from Mr. Alada, and the question, following the well-guided directive of the CBN for the financial institutions to stay away from cryptocurrency. I mean, I guess we can never get away from this cryptocurrency. So the question is, following the well-guided directive of the CBN for financial institutions to stay away from cryptocurrency transactions and accounts, which has turned out to be a saving measure as cryptocurrencies continue to remain volatile and recently crashed drastically. Please, are financial institutions required to retain the funds after closing such crypto-related accounts, or are they required to remit the funds to CBN or release the funds to the customers? This is a question from a banker. May I kindly request the Mr. Kofo Alada to please throw some light on these questions. There are a whole questions for you, if I must say. So would you want me to ask all of them at a go, or do we take them one at a time, as much as time can allow us to take?
Actually, I at least on the board, in the chat room, I can see about three questions. I don't know if there are more than that. One from Oluwaseun Malomo, Chino Adeawe, my friend, then Jude Esomonu. I don't know if there are more questions for me.
Yeah, there are more questions.
Whoa. Okay, let's quickly answer.
More questions.
Yeah, my comment on the last question is that, it's guided by the content of our circular on this. When the directive was given, is for you to close the account and you can't continue to retain the money. However, where you do not, as a bank, banks have been found to have flouted the directives in this circular, and they'll be penalized accordingly. And in such instances, well, the funds in such an account have been treated differently. But I would not want to comment further on that because I have 1 or 2 cases pending in court on this. And as lawyers, we do not want to comment on matters that are just sub judice. That would be my reaction on that.
All right. Thank you very much, sir. Thank you. I also note that there is another question here which says that, please, what is the CBN doing to curb irresponsible business conduct, most especially the lenders as they increasingly operate in Nigeria?
Yeah, you recall that I alluded to this in the course of my presentation. And yes. I think more than ever before, the central bank has become so alive to what I would call its responsibility to maintain responsible business conduct, the past few years, especially under the present regime of Godwin Emefiele, following the issuance of the consumer protection regulation. And like I said, you have chapters on responsible business conduct. And there you have provisions on how lending is to be carried out, how realization of collateral, how debt collection is to be carried out. Specifically, you will find out that even telephone calls are not supposed to be made beyond certain hours when you want to even demand for repayment. But unfortunately, you receive messages in the wee hours and in the midnight about from lenders who are seeking to collect funds. But it may also interest you to know that some of these lenders are actually not holding the licenses issued by Central Bank of Nigeria. Some of them are, local or state-based money lenders who have leveraged technology to go beyond the jurisdiction for which they were licensed. But I'm happy to inform you that Central Bank is taking steps, in this particular regard to see how we can, reach out to these license holders and make things better. But what I can tell the questioner is that where there are concerns like this, all he needs to do is just to do an email if he wants to take this down, CPD, Capital Protection D, Delta, Charlie, Pronto, Delta, CPD at cbn.gov.ng, and lodge a complaint, giving the particulars of the company and the concerns that it has, and Central Bank will take it from there. And such institution, if licensed by Central Bank, will be sanctioned accordingly.
All right. Thank you so much, sir. Since you already viewed the dashboard, there is a question directly from Tinu Ade-Awe. Tinu Ade-Awe is the CEO of the Nigerian Stock Exchange. She dropped a question for you at the dashboard. I don't know if you can access it, or do I read it out?
Yes, I've seen. I hope I'm still audible.
Okay. Yes.
Yeah, I think I've seen that. That was the question about assets. Question of why are we calling it assets when they cannot access the banks or something like that. Well, yes. Just like Tinu knows, the circular issued by, or the regulation issued by SEC is still it's in its infancy, trying to take foothold. So as soon as this guideline begins to run, some of these questions will become, responses to, how we treat this will become very, very clear. By the time you start having license, most of them are unlicensed now, and any responsible regulator will not allow unlicensed companies to just go AYR on the system in view of the risks that they contain.
Exactly. Okay, sir. I hope I'm not bombarding you, but there is yet another which says, following the launch of the e-Naira, please, what has the acceptance rates of the e-Naira been, and what are its pros and cons, as well as the challenges? And then it goes further to say, is the e-Naira actually relevant in the face of the electronic banking services offered by the banks and fintechs? And can banks and fintechs not step in to fill the gap that the e-Naira is seeking to fill? Is it a mouthful?
Well, the more the merrier. And the payment platforms, there's no end to emergence of payment platforms. At the risk of trying to deliver another set of 2-hour lecture on e-Naira, what we can tell you is that e-Naira is a central bank digital currency, and it is a fiat currency, just like Naira in your pocket, as I stated. So it's different from when you have to go through different level of authorization when you are doing your e-banking. Here the liability is that of somebody else. It is like you walk into your bank, you withdraw in a Naira and put in your pocket. So what you maintain in your wallet, your e-Naira wallet, is like money in your pocket. It is no longer residing with your bank or your account. You understand? So that is the distinctive feature, between e-Naira and the other platform that were in existence before. Talking about acceptance rate, yes, this is actually, it's not an event, it's a journey. We started in October last year, and as we speak today now, the merchants were onboarding merchants at a very, very speedy rate, and the acceptance rate among the merchants, who are very, very critical to the usability, or the usage rather, of e-Naira, is already increasing by the day. As we speak, I can tell you that electricians, organizers now accept e-Naira. So all you need to do for the questioner, I will just dare him to try to open a wallet, and where he sees e-Naira sign, can carry out your transaction. And again, with introduction of the USSD access as well now, it's like you can do this in the village, and thus, well, pros and cons is talking about. The major pro is the fact that financial inclusion is being promoted as a result of the introduction of e-Naira. So other functionalities and the advantages will continue to unfold as we go further with the use of e-Naira. So it's early in the day to have the impact of everything that we have promised on e-Naira, but we'll get there. Thank you.
All right, sir. I'm actually inclined to giving you a breather, but and then proceed to the other speakers. But I must ask these two questions that are just right here before me. One says, do you think the use of subsidiary legislation is adequate to properly regulate the fintech sector in Nigeria in the light of the decision of the court in RiseVerse Technologies Limited versus CBN?
RiseVerse is no decision that can be cited, in my view. For us, when you're looking at fintech, where do you want to put section 57, 58 of BOFIA? Where do you want to put the interpretation section 120, 131 of the BOFIA that clearly specifies, that covers the field on and on fintech companies in Nigeria. So what Mr. Alana Olugbemiga is asking, yes, testing the water. Justice Taiwo, I believe, retired, gave this decision, and well, like I said, which is just still being tested, where he said that you cannot use a circular to do X, Y, Z. But we all know that a circular cannot override the law. But a circular or a subsidiary regulator can adumbrate the provision of a law, which is what that particular circular did. And for a judgment to say, oh, you cannot do X, Y, Z, that is still being tested at the appellate court as we speak, if I'm right. So what we can tell Mr. Olugbemiga is the fact that the powers reserved in the central bank in section 56 of the CBN Act, or thereabout, or 58 of the BOFIA, that is the power to issue regulations, directives, guidelines, circulars. They are not just put there for nothing. The parliament deems it right that you can use subsidiary regulation to do some of this. And we are in the course of issuing quite a number of regulations to give life to the provisions of the BOFIA.
All right.
Thank you.
Like I said, after this one, I'll give you a breather. The last one says, what is the minimum share capital in registering fintech companies in Nigeria? What is the process, duration, and cost of getting a license to register a fintech? I guess this may not be particularly a CBN.
Yeah, because you have we can just say that they are different. From our presentation, we discovered that you have various classes of companies or operators that can qualify as fintechs. So it depends on which one you want to go for. And the fact that also that it is also clear that the business of banking or other financial institution can actually be carried out digitally now, electronically, and if you permit me, fintechly. So it now depends on which one you want to go for. So whichever category you want to go for will determine the share capital requirement that you meet. If I would just even answer, somebody also asked, that's Mark Ikonge on GSI. Yeah. GSI, not GSO. Global Standing Instruction to lending financial institutions to help recovery of debt in that sector. Yes, we are working on that as well, extending to all corporate lenders and these corporate borrowers. So this will also be extended as times goes by. Thank you, Dr. Agu.
Thank you so much, sir. And I didn't expect anything less. You were able to do justice to all the questions, and I'm sure you're prepared to take more. Except that I want to give enough opportunity for us to hear from Wema Bank on the alert. And the question is, there has been fears that most of these fintech platforms are prone to fraudulent activities and breach of data privacy rights of users. What are the measures put in place to curb this menace with regard to alert by Wema Bank? We will be honored to have the MD speak to us on this, and or the alternative to have Mr. Olukiti also speak to us on this.
Yes, Dr. Mido.
Okay. Let me speak to that question. So thank you very much, Dr. Agu. Yes, as you know, we are all in an ecosystem, and one of the key things that is affecting the industry or the ecosystem is the issue of cybersecurity. And as you always say, you are as strong as the weakest link. So in trying to form partnership, I mean, fintechs run their business through banks. In trying to form partnerships, we have a framework that we've put in place that we're working on. Is a live document that we are working on every day as scenarios or issues are coming up to further make it a more robust framework. And that framework basically talks about some checklists on what to look out for before you partner with any other party. Things around regulatory licenses, ensuring that all the licenses are in place. ensuring that you have the right governance in terms of managing data, to ensure that you have the right tools in place to check for cyber threats, ensuring that all the legal frameworks are in place, the legal documentation on IP, on intellectual property rights and all, intellectual property and all that. So all these things are things that we look out for in ensuring that when we're bringing anybody on board, the person is able to, we're able to have that confidence. And one other key thing is also the issue of onboarding. How do the fintechs onboard these customers? Because it is also possible that, as you know, traditional banks have tighter KYC rules than the fintechs. And again, the issue, it's a balancing act between trying to improve financial inclusion and also try to tighten the rules on KYC. So these are the things that we normally look at, before we bring on partners onto our platform. So I don't know whether that speaks to, but clearly yes. I mean, there a lot of instances where some of these fraudulent acts are carried out through the fintechs. But unfortunately, what you see are the banks that are sitting behind them, the settlement banks.
Thank you so much, sir. We are indeed delighted to hear from that experience from Wema Bank. My next question will be to Dr. Ben Bewa. Someone said here, thank you for very insightful information. And the question is whether you have advice to OFIs, other financial institutions who deal with third-party payment processors in safeguarding themselves from breaches that occur through banks that use their third-party services, meaning a breach that can come from a bank as opposed to occurring directly on the third party's site or platform. Dr. Bewa, can you hear me?
Yes, I can hear you. So I'll make a quick reference to the Nigeria Data Protection Regulation, which requires all organizations to have a data processing officer, as well as appoint data processing compliance organizations. Right. So, irrespective of the ownership of data, as long as the data falls within what the law has prescribed as personally identifiable data, such an organization is expected to comply with the provisions of the regulation. And so that takes care of the issue which Funke has asked, the question that Funke has put forward. So what the bureau, the newly established bureau, is doing, over since February when it was established, it's mounted a vigorous sensitization exercise, because for all, everyone here knows that the issues that we are dealing with right now in terms of the extent of privacy issues are new. The technologies that we are dealing with are evolving. So everybody is learning, but we are also learning fast enough. And hopefully we'll be ahead of the curve when it comes to prevention of data breaches.
All right, thank you very much, sir. I have one question here for Dr. Brima, and the question is: funding is a major problem to entrepreneurs that intend to venture into a fintech sector. Hence, most of these fintech startups have majority of their investors as foreigners. How can the government or commercial banks assist entrepreneurs in their fintech startup funding? Dr. Brima, can you hear me?
Yes, I can hear you. I mean, funding is a major problem. I mean, right from the pre-seed stage. The typical Nigerian investor does not really like intellectual property, and I think that's where the challenge is. and that's why we have almost 99% as foreign investors. However, there are a lot of efforts being made by the association and a few other groups to look at how we can work with government. We can have a local fund to support fintechs, startups, to also look at crowdfunding as an option. So there are a lot of initiatives being worked on, and we hope that before the end of this year, some of these initiatives will start to see them work. But it's for all of us here to also be bold enough to invest in the space. So that's really the challenge with local funding for fintechs, and that's why majority are from offshore base.
Do you also think that the issue of funding coming from outside will remain an issue so long as we still intend to leverage on the technology from outside, or are we sufficiently knowledgeable in technology to drive this fintechs?
Well, I think that, the technology is not really from outside. Technology is technology. We just need the right skills. Is Stripe investing in Paystack is because of the technology that Paystack has deployed locally, and which I believe they're also exporting to other places. So in terms of technology, I think we have technology that's working. There's no doubt that some will be imported. So I think it's been able to strike a balance in that really. But funding will keep coming. There's no doubt, as long as the operating environment is conducive for investors. It's everybody wants to make money, and this is a huge market. So I will say funding will keep coming.
All right. It's indeed been a great privilege. Questions are still dropping, but I can only it's prudence demands that we know when to bring this to a close, because if we allow these questions to continue to come, the projection was that we are going to round up by 2 o'clock. We already exceeded it by 35 minutes. I want to sincerely thank all our speakers. We are indeed honored to have had you all on this panel, and we indeed appreciate the time and the expertise, the industry that you have brought to bear in the papers you presented. There is no doubt that we have been able to dissect the fintech industry from all dimensions, both as to regulation and as to the way forward, the challenges and the way forward. Everyone who has participated has made tremendous contributions. The questions are coming. For those we haven't been able to answer, and that is not because we do not consider your questions important. It's just because prudence demands that we end the program at the appropriate time. I want to, at this time, without taking so much of our time any further, invite Mr. Okon Uye. Mr. Okon Uye is a partner in Royal Heritage. I would like to invite Mr. Okon Uye to give a vote of thanks, just to express how delighted and how grateful we are to have had all of our speakers, all the panelists, and indeed all our attendees to have been on this platform. It's a platform that is ongoing. The intention is that is going to be a series that will continue to look into the fintech industry, because we have all identified it as a new oil. It is also something that is dynamic and progressing. So as much as we want to continue to thrive in this industry, we cannot but continue to raise the benchmark and to be able to look at avenues to better the system, as it were. On this note, I would like to invite my partner in the office, Mr. Okon Uye. Mr. Okon Uye, please, you'll be on this call to please express our vote of thanks to our distinguished speakers, our panelists, and the attendees. Mr. Uye, are you on?
Thank you so very much, Mr. Moderator, Dr. Susan Agu. I want to place my indelible thanks to the distinguished speakers, and participants. I want to thank my lords, Justice of the Court of Appeal, sorry, Justice of the Supreme Court and Justice of the Court of Appeal, and other judges who have spent their time to attend to this seminar. I want to thank sincerely the MD of Wema Bank. I am aware in the course of this preparation of seminar that he was extremely very busy and engaged in other engagement with the bank, but he spent time to come and share knowledge with us. Mr. Kofo of the Central Bank have my thanks and my deep appreciation for educating us on issues and legal regulations on this important financial system, which is, though not new, but has attained prominence in the financial space in Nigeria. Mr. Obima of Fintech has done wonderful work, and we thank him so very much for spending time to be with us. It is my pleasure to continue to thank the participants who spend their time and resources to be able to be part of this enterprise. Sharing knowledge and information is a very important aspect of development of any nation. And what the speakers have collectively done today is to move the nation, the participant, the investing public into a vistas where they are sufficiently informed of the new financial systems in the country. Well, thank you so very much. And I wish that as wherever you may be, you're staying safe. And thank you so very much for attending this webinar. God bless you all.
Thank you so much, Mr. Okon Uye. I thank you for thanking us and thanking our speakers. While this webinar is winding up, I cannot but recognize the presence in this call of the chairman of the Ondo State Board of Inland Revenue, who is on this call and who has asked a question that I cannot ignore. His name is Tolu Adebi. He's the chairman of the Ogun State Inland Revenue, and his Ondo State Inland Revenue rather. And his question is, I have not heard yet how fintech can help solve the informal sector tax collection in Nigeria. I do not want to, I do not know whether there is any speaker, because this will be rather jumping the protocol, haven't said the vote of thanks. But if there is any speaker who is gracious enough to address this question being asked by the honorable distinguished chairman, we'll be very glad to have the person speak.
Kofo here,
Okay,
if you
sir.
permit,
Yes, sir.
I'm minded to actually speak because of who the questioner is.
Yes, sir.
I would say that the chairman is well aware of the fact that tax authorities can appoint agents and the rest of them, and I believe certain tax authorities are already speaking with banks with the view to having them, collect taxes for them. So I think depending of what services that the fintech, is offering, if and again, I actually want to use the word fintech, advisedly, because for us, anybody can, in quote, be fintech, anybody can be fintech in the sense that it is just about what services you are rendering. So in my view, any fintech company that is into collection of deposits in whatever form, can actually be assigned as an agent. However, well, we leave the MOU or the agreement between the authority and such companies, and the company, the tax authority also will look at its own enabling laws and determine the kind of company it should deal with, so that they will determine the kind of payment platform, how these funds will get to them. But I think there's a lot of possibility in the use of fintech companies of whatever form. How do you want to come? Are you an MFB that you want to do that is operating on the technology platform or operating digitally, or are you a PSB? I think it's a good thing that the chairman has thought about this. I can tell him that there are actually possibilities of such companies being used for tax collection, but it should be, as we know, within the ambit of the law that created the authority that is collecting the tax. That's my view.
Thank you very much, sir. Thank you for bailing the cat in that regard. And I also do know for a fact that just like you have said, there are several software solutions which are now being deployed to capture the informal sector. And we are indeed aware, and we are very proud of what the chairman is already doing at the moment. And I'm sure this question is not coming from a place of not knowing what to do. It may just be...
Can I just add a word or two?
All right, sir. All right, sir.
Okay. So the end result, I know it's coming from the position of someone who is in charge of the revenue board, but what I see as a huge possibility for Nigeria is for us to increasingly attempt to formalize a lot of the informal services that are available. So once we are able to draw this group into the formal system, standardizing services, and there are so many services that Nigerians on a daily basis depend on, but they are not formalized, and so government is losing a lot of revenue as a result of the current unstructured nature. So standardizing services, no matter what kind of service it is, whether it's barbing, hairdressing, or carpentry, and so on, it's a huge step towards increasing the possibility of tax revenue from such services.
Thank you so much, Doctor, for again throwing light on that.
Dr. Agu, just
yes,
one thought.
All right.
At the heart of most issues we have about in the problem, around taxation for individuals, and even banking services, financial inclusion, and I mentioned that in my presentation, has to do with identity. Until we have identity, bringing everybody within a tax net will become a mirage. In the advanced world, you don't live in a country and you don't have a tax identification. It's impossible. Everything is tied together. Your telephone number, your driver's license, everything you have is tied together. You are a unique person, and you are known by address, you are known by name, you are known by telephone number. So it is mandatory on you to file tax return. Now, are you paying tax? It's a different matter. If your income doesn't qualify for tax payment, you do not pay. But the government has your record, has your identity, and then they can impose what sanction defaulters, evaders merit in terms of tax payment. Now, if we say we want to get to the informal sector to collect tax, and you don't know who they are, the artisans, the carpenters, the road food sellers, and all of that, you pass by them, you can't trace them, you don't know them. How do you want to go and even use technology to collect tax? Technology is an enabler, but what will make this happen in this country for us to make progress? We keep talking about so many things. You don't have power, you want to be a technological advanced country. It's not possible. You don't have identity, and a lot of issues around security, tax collection, and all of that are bedeviling us, and we want to tackle them. You can't tackle them. So we need to come together as a country. Do we really want to move forward? Do we want to take a leap into development? If we want to, as individuals, we need unique identity. If you have that, tax collection becomes easier. Thank you.
Thank you so much, sir, for again that depth that you have brought to bear in the question. They didn't come from the just writing. It's a question of a period of expertise in the industry and the knowledge you have got with you. Thank you so much for what you do with Charm Switch Limited, which we are all privileged to know about. And I once again at this time thank each and every one of you who have been on this webinar. We do not at all take this relationship for granted. You have all demonstrated your love for us and your love for what we do in Royal Heritage. I am only saying to you that we would never take that relationship for granted. We wish each and every one of you well in your distinguished endeavors. We'll continue to look up to you as the mentor in the various areas of practice that you are. And let me appeal, maybe, because we are Oliver Twist, that just like I had said that this is a series, there will be need for us to call you back, because this is just the beginning and there will be many more of this to come. Please, when we call, do not turn us back, just like you have not turned us back this time. I pray for each and every one of us that all we do, we will succeed, and Nigeria will be a better place for each and every one of us, and will stand tall in the Committee of Nations. Thank you all for your time. I thank all those who have also been in this webinar. The DG of SEC is here, and so many other personalities who have identified with what we do here in Royal Heritage. Thank you all, and God bless you.
Thank you.
It was a pleasure. Thank you.
Thank you.
Thank you.
Thank you.
Thank you,
All right.
sir.
Okay. Bye.
Bye, sir.